So today we want to look at a question here. This is question 2 of December 2020, and it's a question on incomplete records. It's a question on incomplete records. Now, just to give you a little background on incomplete records, businesses operate in different forms, and when businesses are operating, we have businesses that operate as sole proprietorship businesses. We have businesses that operate as partnerships. We have businesses that operate as private sector. We also have businesses that operate as public, limited companies, and so on. Now, most shops, retail shops are classified as the sole proprietor businesses, and these don't have an accounting system. They also don't have an accountant in place, and so their information is usually scanty, and that means that they don't have a direct way of preparing their financial statements. So sometimes they get to scenarios where they need financial statements, and this could be, for example, they have gone to the bank and they want a loan from the bank. This could also be cases where maybe say the government that wants to confirm their tax liability, or even the business itself, the business owners want to know the performance of their business. So it is based on that that they ask accountants like you to prepare for them usually the financial statements. So this is why we look at preparation of financial statements from incomplete records when we are preparing for the financial accounting exam. So we have this question. It is a question of a sole proprietor called Mama Fina, who runs a retail shop in Soroti district. So we're going to look at the question and we see what information to pick and how we can prepare financial statements from this. So they're telling us that Mama Fina runs a retail shop in Natukunya, Soroti district. Within her shop premises is a mobile money business trading under a different business name. She does not keep her business records according to the double entry system. The following balances were extracted from her business records for their ended 31st December 2019. Assets and liabilities balances for their ended 2019 were as follows. So we have account title, then we have balances as January and balances as at 31st January. So the first account title we have is furniture and fittings, and this costs us shillings 16 million. And they are showing us that it has a balance of 15.2 as of 1st January. What does this mean? This means that we have to find the balance as at 31st December. So the 15,200 we are seeing there is the net book value as at 1st January. Refrigerator is also same story. It has a cost of 6 million. And then it has 4.8, which is basically the balance as at 1st January. And then we also have a question mark on 31st December. So basically what we have to do is to find the values in the question marks, is to basically do what? Is to basically find the depreciation for there and see if there are any changes into these assets, either there are any sales of the assets or additions of the assets, then we adjust them. Then we can be able to find the balances as at 31st December. Then we have trade payables, which is 3,600, and then 4,800 at the end of December. We have inventory, which is 8,820. Then we have 11,200. Trade receivables, that value, and then the closing value. For inventory, I think you can see that the value on 1st January is opening inventory, and then the value on 31st December is closing inventory. And then we have trade receivables right there, and then we have cash. Now cash, we have opening value of 5,240, and then we have a question mark. So it means that we also have to identify the cash balance as at 31st December. And then for bank, we also have 3,120 as mainly as per the bank statement. And then we have 3,976, which is the closing balance. And then we have additional information where they say that the retail shop's capital as at 1st January 2019 was 40,080. So this is their capital as at the start of the period. And then they went ahead to tell us that purchases and sales for their ended 31st December 2019 were both on cash and credit basis. Total purchases during there were shillings 12.380, of which 40% related to cash purchases. Mama Fina sold items of inventory at an informed markup of 25%. During there, 85% of the total sales were cash sales. The following expenses were settled using part of this money. So we have shop attendance wages, we have rent, we have other expenses, and they're telling us that the balance was subsequently banked. They tell us that she received money from debtors through the bank and paid shillings 6.26280 to creditors through the bank during there. Mama Fina offered the two shop attendants gift vouchers worth shillings 150,000 during the Christmas season. The items were picked from the shop. Then they are telling us that it was discovered that she withdrew money for business bank account for personal use, but could not remember the total amount withdrawn in there. And then they went ahead to tell us that she sublets part of the business premises at shillings 100,000 monthly, effective 1st January 2019. By their end, only rent for 4 months had been received through the business bank account. They also tell us that Repulse depositing shillings 3.2 million received from mobile money customers into the retail shop's business bank account, and withdrawing shillings 2.3 million from the same bank account and putting it in the retail shop's cash box. The business's depreciation policy is as below. Assets, furniture, and fittings is at 5%, reducing balance. And then refrigerators is at 20%, reducing balance. Then they tell us that prepare for Mama Fina's retail shop business as at 31st December 2019. 1, relevant ledger accounts. 2, statement of profit and loss. 3, they want us to prepare the statement of financial position. So this would be like any other number where we have the private sector, where you have to prepare these financial documents or financial statements. But in this case, we are seeing that we have scant information. We don't have a trial balance that we can directly pull from to prepare the required information. So what we have to basically do is to go on to calculate some of the information that we don't have. And that is how we do. And so this kind of report keeping is called single entry report keeping. So given we have done the first read through of the question, and they have asked us to prepare relevant accounts, and then they have asked us to prepare the statement of P&L and the statement of financial position. Now, one of the things that you need to realize is that the relevant accounts that you're going to prepare are going to basically help you find the information that you need to prepare the financial statements that they have asked for. So we know very well that when you're preparing a statement of profit and loss, we know the formats. We know that you start with the sales, you less cost of sales, you get your gross profit, you go to the expenses. Now from this question, the first thing definitely you look out for are what? Are your sales. So when you look from the question, the way it starts, the balances, we don't see sales. Then when you come here, they say purchases and sales for their ended 31st December 2019 were both cash and credit basis. Total purchases during there were shillings 12.380, of which 40% related to cash purchases. So this means we have our purchases, but we don't have our sales. Then they also give us more information here. They tell us that Mama Fina sold items of inventory at a uniform markup of 25%. During there, 85% of the total sales were cash sales. The following expenses were settled using part of this money. So the only thing they're telling us about the sales here is the percentage of total sales that were cash sales. They are still not giving us the value of our sales. When you again look down, you still don't see the value of our sales. So what I would basically do, I'll just try to share something small here. So I've shared something in the chat box. Shared with you the question. Just in case you're watching the replay of this, you can find the questions on the WISPA websites for you to follow through as we try it out. Okay. So I'll move directly to my Excel. So the first thing we are going to look for are the sales, okay? So I'm going to have a tab here that I'm going to regard as my working. So we don't have sales, okay? But we have purchases, okay? We also have the percentage of sales that are cash. And this one, they gave us 85%. And then we have a purchases figure, which is given at 12 that. So I'll just put the value there. So I want you to again watch this critically. There's something, they made a statement here where they told us that Mama Fina sold items of inventory at a uniform markup of 25%. A uniform markup of 25%. Now, this is an important information when we are trying to look at whatever we are looking for. So our markup is actually 25%. That is our markup. I want to draw you to the formula for markup. Markup is usually given by gross profit divided by cost of sales. Gross profit divided by cost of sales. And of course, this is usually multiplied by 100%. That is usually how our markup looks like. Maybe also just to just share with you, markup and margin sometimes are used interchangeably, but they mean totally different things. Margin is gross profit out of sales, still times 100, still times 100%. In this case, they have given us our markup. Now, one thing that you get to realize is that, especially for businesses like this, you can be able to use the markup to either determine the sales or purchases, just in case we have one of the values. And how is that one done? I want you to look at as I expand this formula. So markup will equal to gross profit is given by sales minus cost of sales. And we are saying that this is again divided by cost of sales. We agree that gross profit is sales minus cost of sales from our P&L format. Divide by, so you're seeing how I'm trying to expand my formula, okay? I'm trying to expand my formula so that I can be able to use the information I have. So I can see that sales are coming in here. So what if I have the markup, can't I actually find the sales? I think I can. So, but I'll say, but cost of sales is given by opening stock plus purchases less closing stock. That is what I have. So I have this information. So I have the cost of sales because I have opening stock, I have purchases, I have the closing stock. Again, I'll reference you back to the question. The purchases have been given, they are here. Opening inventory is right here. Closing inventory is right there. So can't I determine my cost of sales? I can determine my cost of sales. And remember, if I have cost of sales and then I have my markup, I can actually determine my sales. So that's how I'm actually using this. So let me calculate my cost of sales. So cost of sales we've said that it is opening stock plus purchases less closing stock. So let me pick the values and see how that plays. So my opening stock is 8820. That's my opening stock, which I'll record here. These figures in thousands, so I'll choose to use thousands here. So I'm supposed to add, on this, I'm supposed to add my purchases. So purchases I've gotten, they gave me 12,380. 12,380. 12,380. Okay. So this is how it goes. That's what I have. Now, the next thing is lessing my closing stock. The next thing is lessing my closing stock. But before I less my closing stock, I want to draw your attention onto something else. Usually, when we are calculating a cost of sales, we also look at any stock changes or any changes of inventory that are not just due to selling. So this could be, for example, maybe inventory that was taken by the owner out of the business, because this usually happens with such kind of businesses where somebody sells rice and picks some kilos of rice for personal use. So those have to be deducted. So we just try to check through and see if there's any other inventory item that moved out during the times of running the business. So these are values on depreciation. This is money, doesn't speak about inventory. This is withdrew money from the bank for personal use. So basically that. Now there's something here. They are telling us that Mama Fina offered 2 shop attendants gift vouchers. Mama Fina offered 2 shop attendants gift vouchers worth 150,000 during the Christmas period. The items were picked from the shop. So these items affect our inventory. They are not through sale. So they are not part of our closing inventory. So we have to adjust them on our cost of sales because they are not sales. These were given out for free. Okay. So these gift vouchers worth 150 each. That means if there are 2, this is 300. So when I'm calculating my cost of sales, I have to less the gift voucher, which is basically 300,000. So I'll just come here and say less 300,000. Okay, because that was given out. And then I'm going to go ahead to do what? After I've less my gift voucher, I'll now less comfortably my so-called closing stock. So closing stock, from our question here, closing stock is 11,200. Closing stock is 11,200. So less 11,200. I'll add the 3 zeros like that. So this should be able to give me my so-called cost of sales. This should give me my cost of sales. I'm getting this value. You can try using your calculator and see what value you get, but you should be able to get the same value. You can also do this in a tabular format, but I've chosen to take this direction. So this is my cost of sales. Which is equal to 9.7. So if I have my cost of sales, I can actually determine because I have my markup. So markup, they have given me markup to be, my markup is 25%. So I'm going to use the markup, the 25%, and I'm going to substitute it here. So that's how I have it submitted in my formula. And what this means is I'm now going to have, I'll just bring this 100 to be here, and it will be 25 divided by 100. This is just mathematics, nothing much. 25 divided by 100 is now equal to all this. Okay, then I cross multiply, or I can just first get the value here. This is 0.25 is equal to this whole thing. Then when I cross multiply, this will be 0.25 times 9.7. I think I wrote fewer zeros, but it's 9.7. This is equal to my sales minus that. That is basically what I have. So from here, I can say my sales will equal to, I'll just pick this 9.7, send it here. It's just 9,700. $9.7 less this value. So that's what I have. So my sales finally, we are going to get our value there. You can use your calculator. So what do you get?
$9,275,000.
Okay, that is what she gets. Actually, this should be a plus. When 97 comes this side, it becomes a plus. So this should be a plus. This should be a plus. Just add them together. It's not a minus, it's a plus. Because the 9.7 is a negative, when it comes inside, it becomes a positive. So sales will equal to 9.7 plus 0.25 times 9.7. So you repeat it again, and I think you come to 12.125. Okay, so this is what we get as our sales figure. So I hope you get the same answer. So let's now look at, remember why we are doing all this is because we are looking for data that is going to help us find or draw Mama Fina's retail shop businesses statement of P&L. So I can start on it so that we can be able to manage time as well. So Mama Fina's retail business statement of profit and loss. So I'm starting from here, but the relevant accounts, we are going to draw them as well. Like I told you, we just going to use the direction of what information we need in the statement of profit and loss, and that will help us on what accounts we are going to draw. So this is for the period ending 31st December 2019. Okay. So if we have this, we're now going into, so I'll write my sales. Of course, this is UJEX, 1,000. UJEX 1,000, sub UJEX 1,000. So I've gotten my sales from here, which is this. So I'll just come here. I'll try to put it in this column. So I'll remove the 3 zeros. This is the value I have, 12,125. And remember, we less cost of sales. And cost of sales starts with, we have determined the cost of sales already. Remember that we just calculated cost of sales. So I can try to either put the value, or what I'll basically do, I'll do the same thing. I'll try to go on to pick the information, which is now it's going to be opening stock. Add purchases. Remember, we say that we remove the shopping voucher. Less shopping vouchers, because these were taken as stock, and then we shall less our closing stock. So I'm just going to pick this information from what we have. So this is opening inventory and closing inventory. I'll just put it here. Or you should be able to do it fast since you're doing it from your writing. Just copy it. So that's my closing inventory. My purchases, I have my purchases already here. So you can just pick them, 12,380. Then the shopping vouchers were 300. Yeah, 300,000. So we got our cost of sales. Remember, we already got this cost of sales figure. But this is just for presentation purposes. This cost of sales, I just add this, 89.7, which we already have. Let's remove this. We even have already our gross profit. Gross profit is this minus that, gives us that value. Okay, I can actually put this one in this column. That is what we basically do have. Then the next thing I need in the statement of P&L is to add, in case there's any other income, I'll add it here. So add other incomes. So I'll just check through here and see if I have any other incomes provided. So Mama Fina, they're telling you within her premises is a mobile money business trading under a different business name. Now, one of the things that you need to also realize is we are preparing Mama Fina's retail shop business. So we're not preparing inclusive of the mobile money, okay? But the shop hosts the mobile money, and they have talked about something that comes through here. They're saying that sublets part of the business premise at 100,000 monthly effective 1st August 2019. By the end of there, only rent for 4 months had been received. Now, the period between August 2019 and December 2019 are how many months? August, September, October, November. There are 5 months, okay? There are 5 months from August 2019. So what that means is that they only received rent for 4 months. But remember, when we are doing our P&L, we don't look at only what has been received, but we look at the overall, we look at it from the accrual perspective, what has been received and what has not been received. So what I'll basically come and do here is part of my other incomes would be rental income. And I'm going to do, remember, it is 5 months. 5 months times 100,000. Okay, times 100,000, which gives me 500,000, which I write as 500. So you go and look and see if there's any other income. By look of the things, that is the only income we have. So we shall be able to add up the profit, the gross profit with other income to find total income, or you can call it gross income. Which is 2925. Then after this, we shall now go to less operating expenses. Less operating expenses. Now, operating expenses, we're going to look at the operating expenses of this business. Now, they have given us some of the operating expenses. They have told us that the following were the expenses settled using this money. So these are partly the expenses that we have, okay, for this business. So I'll pick those expenses and take them the other side. I believe these are already in thousands. So I'll just put them here. Okay, so right there, I'll ask myself, are these the only expenses or there are other expenses? So I'll go back to my question and see if I have other expenses at hand. So when you look at the question here, she gave gift vouchers to her staff, okay? Now the gift vouchers is also an expense. It's basically like a salary. Okay, it's a personnel cost expense, okay? Because she did this maybe to motivate the staff. So it's an expense of the organization. So the gift vouchers is one of that. Which is gift vouchers is 300. Okay, that is what we have. And then after the gift vouchers, we also need to look back again and see if there's another expense. So we saw something to do with depreciation. So we have depreciation for these two assets, furniture and fittings and refrigerator. So what I'll basically do is I'll come to here under my working. This was actually working one. So I'm now moving to working two. In case you want to reference for the examiner to your workings, always come here where I've put the values and put in brackets working one. That the examiner can easily pick the information. So we are on depreciation. So depreciation, we have two assets, furniture and fittings. And that's the information they have given us. So with this information, I'm going to look at furniture and fittings. So we have this information for furniture and fittings. I hope you can see it. They have given us how much we have for furniture and fittings at the start of the year. So our role is to go ahead to calculate the new value of our furniture and fitting. So if they are using reducing balance method, we said that depreciation is given by the percentage of depreciation multiplied by the net book value. So the percentage of depreciation they have given us is 5%. So this is 5% times the net book value. The net book value is what we basically have, which they have given us to be 15,200. I'll add the 3 zeros since I'm working offside. That's what I have. And in terms of the value, you get 760,000. Okay, you get 760,000. Do we see that? So I'll just come here. Say depreciation. Furniture and fittings, 760. So I now have to look at the refrigerator. So I'm going to pick the refrigerator. So this was for furniture. So depreciation, refrigerators given by 20%. So 20% times, they have told us it's reducing balance method. Now refrigerators at 4.8 net book value. 4.8. So what this means is that this is 960. It's 960,000. So I'll just come here and put 960. So yours is ask yourself, do you have any other expense that you have not recorded? Because you have other expenses, you've recorded everything. So you can try to see if there's anything that you have not recorded, and you should be able to record that. So this gives you total expenses. Just add this, total expenses. So this is our total income, then total expenses is 7 this. So we are going to end up with the net what? We're going to end up with the net loss. Which is given by this minus this. It gives you 4245. That is what you have. And that is how your P&L looks like. So let's try to do our so-called statement of financial position. Mama Fina statement of financial position. And this is the heading changes. This will be as at. As at 31st December 2020. This is 2019. All right, so we know very well that when we are doing our statement of financial position, the first thing we look at are fixed assets. We look at fixed assets or non-current assets. And we know very well that for this business, they have two non-current assets, which is furniture and fittings, which are recorded there. And remember here, we usually have the cost, accumulated depreciation, and then we have the net book value. So the cost here from what we have is 16 million. Our cost is 16 million from here, and then the other one is 6 million. So this is, I'll record 1,000. I'll just say that these amounts are in 1,000s with the X 3,000. Don't forget that. So 16 million. Accumulated depreciation. Now, for me to find the accumulated depreciation for furniture, what I'm going to do is I'm going to calculate the opening accumulated depreciation. The opening accumulated depreciation is, I'm going to get the 16 million 16 million, and I'm lessing 15,200,000. So I get that. That is the beginning accumulated depreciation. Then I add depreciation for there, which is 760. Then I'll get my closing accumulated depreciation, which is this plus this, 1560. So 1560 is my accumulated depreciation. So my net book value, I'll just reduce the 3 zeros here. My net book value will be 16 minus 1560, which gives me 1440. Refrigerator, this is, they have given me something. Our refrigerator is 6 million. Okay. Just a moment. So I'll just come here as well and say, just use similar terms. Opening depreciation here is the 6 million from your calculator minus 4.8, which is like 1.2, plus the depreciation for the period. Sum up these, you come to 216. That here I'll just write 2160. Okay, so that is what I have. Then my so-called net book value will now just become the difference between those two values. I'll get my total fixed assets. I'll go to my current assets. Now, getting my current assets will come from what I have here. They have given me account title, furniture and fittings. Okay, this one I've recorded it. Now I have trade payables, these are liabilities. So these are these from inventory to cash are my so-called current assets. If bank was a negative, it would be a liability. So I'll just bring them here. Now, I just so you notes, just in first look at figures, then I explain something small. So from this, we are going to use these values since we are looking at the end of the year as at 31st December. So we take inventory, we take the closing inventory, which is 11,200. I'll record it here. Let me just use this column, 11,200. Then trade receivables is 3,850. Then cash has a full stop, a question mark, sorry. So we're going to look for that cash. Then bank has that value. So we're going to look for our so-called cash. We're going to look for our so-called cash balance as at the end of the period. And what are we going to do with finding cash? We are going to draw up our cash accounts. We are going to draw up our cash accounts. So now that we're going to drop our cash account, it's more of that part of the question that they also told you to draw alternative accounts, okay? So I'm just going to scroll down and have my accounts here, which is the part A of the question. Part A of the question, the relevant accounts. I'm going to start on the relevant accounts. So now you get to realize that here we have cash and bank. So it's much likely that we have the bank balance, but we don't have the cash book balance, okay? So what we can do here, one of the things that you also realize is the information that is going to go in our cash or bank, okay? In our cash account is from the information that we have. So when you look here, in our cash account, we are going to record any item that was through cash or bank. But we realize, okay, let's first see here. They have told us of purchases, which were cash purchase. So we have something here. Part 2 of this question, we have sales, and they're telling us some sales were cash sales. And then they're telling us that this money were settled using part of this. So this will go in our cash book as well. And then we have something here where they're saying she received money from debtors through the bank and paid that through the bank during there. So there are also details to do with the bank. And then Mama Fina offered 2 shop attendants. What that is, that's inventory. And then there's a lot of information here about the bank as well, okay? So I understand that we have information both on the bank and both on the cash. But for bank, we have already the balance. Now, would we need to draw up a cash book, or we need to draw up only the cash account? Now, since we have movements of cash between cash and bank, we can actually use the cash book because we've been given information even about the bank, so that we can be able to, it can help us to find other figures that we may need, as you're going to see as we proceed. So I'm going to draw up my cash book. Now, the cash book is a cash account and bank account combined. So somebody can draw up the cash account and then draw up the bank account, okay? But I want to do this as a goal, but you can also draw up those as independent accounts. So this lady is called Mama Fina. Mama Fina retail shop. So we are going to draw up a cash book, which is a combination of the 2 accounts, the cash and bank account. And this is a 2-column cash book, so you know. And this cash book is for the period ending December 2019. So you know how a cash book looks like, okay? Usually it has, we usually have details. We have date details, then we have cash column, then we have bank column, then the details, again, the details repeat. Date, details, cash, and bank. That's how we have our cash. That's how it looks like. So we are going to use the information we have to record something in our cash book. So from the information we have, when you go up here, we have balance brought down of cash and balance brought down of bank. So what we shall basically do is I'll come here. This is 1st January 2019. And I'll call this balance brought down. So for cash, it is this value. And then for bank, it is the other value, 3120. So that's the first thing I'm going to do. Okay. Now these figures are in 1,000, so I'll just say uject. Figures are in uject. 1,000. Okay. So that is the first thing I do. And now again, I'll come back and look for more information. Now these balances, I'm going to use them at a later stage. Let me first record whatever is in there. So the capital was that was just a balance, doesn't affect me. And then they tell me that purchases and sales for their end were both cash and credit. Total purchases during there were 12,380. And they told me that of which 40% related to cash purchases. So 40% of our purchases of this value are cash purchases. So meaning I'm going to record in my cash book. You know, purchases are recorded to the credit side. I'll just say cash purchases. Now this one, they didn't give me a date. It's general. So I'll just say cash purchases. Okay. So I'm going to take 40% of 12,380. 40%. 12,380. You get 4,952. We get the same value there? Yes, we get the same value. So that is the first thing I'm doing. Then I'll go back and again follow through. And they're telling me that Mama Fina sold markup at uniform markup of 25% during there. 85% of the total sales were cash sales. So again, I'll come to my cash book and I'll say cash sales. Again, I don't have a specific date. This is general. And they're telling me that 85% of sales were cash. So 85% times my total sales. Total sales were 12,125. So I'll just say times 12, 125, which gives me 10306. And that is under cash. So I hope you're following. So once we have that, I'm now going to go again, continue through. They're telling me that Mama Fina sold items of inventory. Okay, at markup of that, doing there 85% of the total sales were cash sales. The following expenses were settled using part of the money. So part of the cash sales were settled the following items. So these items, I'm going to put them in my cash book on the credit side because they were payments and they were paid using cash. So I'll bring them here and I'll put these values under cash column. Like that. Okay. And they're telling you that the balance was subsequently banked. Now, this is a contra entry. Now, this is what they are saying. I want you to again look at this attentively. So we had our cash sales, which was 10306. And part of that money was used to pay this. And then they're telling us the balance was banked. I will come here, okay? And maybe call this my working theory. And I will say amount banked from cash sales. So the cash sales are this value and paid expenses. So I'm going to add the expenses they paid. When you add these two values, you get 5150. Add them together on your side, 5150. 5150. That's what Excel gives me. So what this means is that this is the amount of money that remained, this minus this. So this is the remained amount. So they're telling us that this amount was banked. And what does that say? That is a contra entry. We call that a contra entry. So money was picked from cash to the bank column. So what we shall put is, in this side, it is bank that is gaining, okay? So I'll put this amount, 515, under the column of bank. And I'll call this cash, because it's cash that is giving bank. And that's how we do cash books. And I'll call this a contra entry. Just put it under column C like that. Then I'll come here and this other side, and I'll write bank. I'll put bracket C, and I'll put under cash column the same amount, because cash is losing as bank is getting. So that's why we have recorded under the column of bank on the debit side and under the column of cash on the credit side. That is how the contra entry is actually recorded. Then they are telling us that she received money from debtors through the bank and paid shillings 6.228 to creditors through, okay. Received money from debtors through the bank and paid shillings 6228 to creditors through the bank. So we have two things here. We have a receipt from debtors, and then we also have what we are calling our payments to creditors. So payment to creditors, it's this value. So I'll just record this. I'll just come here and say payment to creditors is through bank, is that value 6228. But then they're telling us that there's also receipts from debtors. Receipts from debtors. Now, when you come here, they did give us the receipts from debtors. And yours is to ask yourself, can you determine the receipts from debtors? Can you be able to determine the receipts from debtors? Yes, I think we can determine the receipts from debtors. And determining the receipts that from debtors or amounts that were received from debtors, we use what we call the control accounts. We use what we call the control accounts. So I'm going to divert a little from my cash book, but what I can first do is let me first fill in other information in the cash book, then I'll draw my control account. So let me first leave this here. I'll underline it, and then let me first record these ones. Amafina offered 2 shop attendants gift vouchers worth that during this were picked from the shop. This one does not affect the cash book because there was no cash movement. We gave them actual items from the store. Then they're telling us that we withdrew money monthly from the business bank account for personal use, but could not remember the total amount withdrawn. So she has drawings as well. And these drawings are on this side. So she doesn't know how much these drawings are, but we shall determine those as well. Okay, but you know, they are deducted from the bank. So let's see what else is here. They are telling us that sublets part of the business premise, and they had received for rent for 4 months, and this has been through the business bank account. So we have rental income 400,000. In the cash book, we record what was received. We don't record the whole income. So rental income is 400,000 and received through the bank. I'll just record 400 there. And they're telling me here that recalls depositing shillings 3.2 received from mobile money customers into retail shops bank account. So there's a deposit of 3.2 in the bank account from mobile money customers. So I'll just come here and say money from mobile money. It is worth 3.2. The money from mobile money is worth 3.2, and it's directly in the bank account. Okay, that is what we have there. And then we come back here. They are telling us that received from mobile money customers into the retail shops business bank account, and withdrawing 2.3 from the same bank to put retail cash box. Now this is a contra entry. but this time it is from the bank to the cash box, the 2.3. The 2.3 is a contra entry, but this time you're going to see who is receiving. This time it is cash. Okay, it is money that is coming from bank to cash, okay? So bank is giving cash. So we are going to have 2.3 here under the column of cash. And when we come here, we'll have, we are going to call this, remember, as we have bank there, you can even put this in bracket. And then you have our cash, C, 2.3. These are, sorry, this rental income is not supposed to be here. This rental income is a receipt. So let's just remove this one and put it here. Rental income is supposed to be on this other side, not supposed to be here. Just correct that. Okay, so this will be here. These are payments and these are receipts, okay? Just make sure that whatever we've written here is a payment. That's why we have rent payment here. This 300 is actually under the column of the bank. So you know, because it is money being picked from the bank to the cash box. So on the credit side, you'll see that the bank column is credited, and in the cash on the debit side, you see that the cash column is being debited because cash is coming to the cash box. Okay, so cash column is debited. But with the name, you cannot debit cash and call this cash again. Okay, since this is a column of cash, you call this bank. So that's very important. So that is the only thing that they are giving us here. So the first thing we are going to first do is we are going to first look for this, our so-called receipts from debtors. Now, finding our receipts from debtors, we are going to draw up our what I'm going to call the control account. And that control account, debtors are found, okay, debtors, we have what we call a debtors control account, or what you can call accounts receivable. You can call it accounts receivable control account. So that is what we basically have. So we are going to have this in your T format. So we have debit, then we have credit. Now the control account, we start with the balances. So from our balances here, we have the balances for receivables and closing balance. This works just like a receivable account. So we have the balance brought down here, and the balance carried down is recorded here. So this is balance brought down, and then this is balance carried down. Okay, and that's how our receivables are. So after we have those balances, remember what I said with control accounts, we ask ourselves what increases our balance and what will reduce our balance. What increases our balance are more credit sales. And what would reduce our balance are receipts from customers, from credit customers. You can call it receipts from credit customers. So usually, these control accounts usually help us to determine the credit sales. But for our question, we have information about credit sales because they told us something here that 85% of the total sales were cash sales. So it means that the 25% is actually credit sales. So we have the credit sales. What we don't basically have is the receipts from debtors. Remember which we are looking for here. So from this information, we just look for our so-called credit sales, which they have told us if 85% of the sales are cash sales, means that 15% are actually credit sales. So I'll just pick my sales figure, which I got to be 12,125, 12,122, is it 12,125? Like that. Just confirm 125. Like this. So this is what I have as my so-called credit sales. So this is my credit sales figure. So in this case, since I have the credit sales figure, I can just balance off my account and find my receipts from credit customers. So how I'll do, I'll just add these two sides. This is this. So this side is also supposed to add to the same total, but since it's not adding to the same total, I'll have to just get the difference between this value and this value to determine what is supposed to be here. So this minus this gets me 4469. It gets me 4469. So my receipts from credit customers is actually 4469. And this is the receipts that they talked about here. Remember from our question, the examiner pointed it out here where they said that she received money from debtors through the bank. They did give us an amount, and that's why we have looked for it. So given that background, I'll just come to my cash book and look for where there are receipts in debtors and put it in the bank, since they say that this money was received in the bank. So this receipts from debtors, I'll include it here. I'll leave to the small places, since this cash also had that 0.25 as well. So that is what I'll basically do, okay? Right there. So I've found this. Now, the other thing that I left blank was this. Can I find this? Now I want to just confirm that I have input everything that relates to the cash book. So just look through and see that we have covered everything that is supposed to go in the cash book. Now, just in case we have covered everything that goes in the cash book, then we have to make sure that we go ahead to balance of our account and just calculate the missing value. Now, one of the things that you get to realize from our question again, the examiner gave us the closing balance for bank. The examiner gave us the closing balance for the bank. But there's something that the owner of the business does not know. And this is the thing that it doesn't know. Where they tell us that we withdrew money monthly from the business bank account for personal use, but could not remember the total amount withdrawn. Now, this is where the problem is. And this is where we're supposed to go ahead to determine what would be the amount that this person withdrew, the drawings, which they can't remember. So we are going to use, since we know the bank balances, opening and closing, we are going to assume that the balancing figure is actually going to be our drawings. So let's balance off this account and we see. So when you balance off this account, remember the reason why we're also balancing off this account is because cash, they gave us a question mark. So we have to determine the balancing figure for cash. So let's look at the cash column first. So cash column, this side gives you 17,486. And when you add this side, gives you, this is 15,258. So it means that this other side is more. So this other side will dictate the balance. So I'll just record it here. So this 17,846 is the same thing that is supposed to be here, since this is a cash book. But since this does not match, so we are going to have, okay, let me put it here. Just a moment. Just want to demonstrate something for you. So this is the total on this side, okay? Which is higher than this total, which is 15. So this, we should have a balance. It's called a balance carried down. We should have a balance carried down. Balance carried down. And this balance carried down is just going to be this value minus the total of what is existing now. This. You can press this on your calculator. So gives us 2588. Now this 2588, as it is a balance carried down here, it's actually balance brought down here. Balance brought down is actually 2588. 2588. And this 2588 is what we are looking for in our statement of financial position. This cash is what we are looking for right there. 2588. So that is one of the key reasons why we have drawn up our cash book. Now for bank, again, for bank, we are glad they gave us beginning value and they also gave us the closing value, which is 3976. So instead of us looking for the balance, we are going to look for the drawings as the difference that we have here, because this is a missing figure. So what we shall do is we are going to get the totals. So bank, this side, the total is, because here we have full details, this total is 16,345. So this is 16,345. That is what we have as our bank balance. So this 16,345 is supposed to also be the total, this other side. 16,345, sorry, here. Supposed to be here. Okay. But remember, they also gave us the balance carried down. So they gave us the balance carried down. So this so-called balance carried down 3976 actually goes here. It goes here. So we already have the balance. We don't have to find it like the way we have done for the cash. So we already have it. What we have to find is the drawing. this value is the one that is missing. So you can see that we have all the rest of the information. We have that. So we have to go ahead to find the missing value. Okay. Okay, just a moment. Let's just look at something here so you understand something here. I've just seen the credit side of our cash book, and we just want to. So here they are telling us that recalls depositing 3.2 million received from mobile money in the bank account into the retail shop's business account. Now, like I said, we are looking at our so-called, this business that we are looking at is the retail shop alone. It is the retail shop alone. So if it's the retail shop alone, means that the mobile money business is separate, okay? Is separate. So that's why we are seeing that we had recorded the 3.2, because we came here, we recorded this 3.2 money from mobile money that we were trying to deposit here. And then it told us that this was later withdrawn, okay? So the 3.2 belongs basically to mobile money, and it was both, it was basically deposited into the retail shop account. But one of the things that also you need to realize is, I want again to draw your attention before we can proceed, is that the retail shop is separate from the mobile money shop. So this money does not belong to the retail shop. It's a mobile money. It's money for mobile money. I don't know if you get it. It is money for the mobile money business. So if it is so that's money for the mobile money business, what we are basically going to do here is we have to adjust this mobile money that is here, because it's not money that belongs to the retail shop. So we are going to adjust it, and adjusting it means we are going to adjust negatively within our so-called cash book, so that we don't report it. Remember, it is in the bank. If we don't adjust it, because just imagine, if we don't adjust it, we are going to have an overestimated figure of what we have in the bank account, yet that does not belong to us, okay? So one of the things that you need to do is to remove it, the mobile money. Mobile money banked. This was 3.2. So the 3.2 is also adjusted here, okay? It's also adjusted. It is off our balance, since we are doing a statement of financial position for the retail shop. So what that means is, now, once we have this information, we have the 6228, we have the 300, we have this and this, and then we have this. This whole total is supposed to add to 16,345. But right now it is 15,704. So what we do, we basically just get the 16 and subtract the total of all what we have in this account, in this column. 345 minus 6228 plus 2300 plus 3200 plus 3976. So you get 641. You get 641. That is what we have as a missing value. And this drawings got your statement of financial position under equity items. So that is what we needed to calculate here. So I'll come back to my statement of financial position. I remember I drew up the cash book mainly for this, but I've also used it to determine drawings that I'm going to use somewhere. I'm going to ask myself, do I have any other current asset? Yes, I have a current asset here of rent that was supposed to be received. Because they're telling us that we sublet, but they only gave us rent for 4 months and 1 month remained pending because it's from 1st August 2019. So I have accrued rent income. Accrued rent income of 100,000. So I'll just say accrued rental income of 100. Then I'll check and see, do I have any other additional assets? Current assets. So I don't see any current asset here. I don't see any current asset other than those. So what I'll basically do is I'll find my total current assets. Which is this. So if I want to get total assets, it will actually be equal sign summation of this and this. That's my Excel, but you can use your calculator. Then I'll look at equity and liabilities. So under equity and liabilities, I'll start with my equity. I have capital. They gave me capital, so I don't need to look for it. Capital was 40. That's, so I'll just come here. I'll remove 3 zeros, so it is that. My capital. I'll say less drawings. The drawings is, we have gotten it here, 641. So I'll bring my drawings here. And this is negative. I'll also bring my loss, which I'll call my retained loss. So this is retained loss, or retained, you can call it, you see retained earnings anyway, but negative. It was 425. Four, 2, 4, 5. 4245. Okay. So I can get my total equity. So total equity is 35,194. That is what I basically have. Then I'll proceed to my current liabilities. Liabilities, I'll start with the non-current, but I didn't see any loan. I only see trade payables, so I'll just say current liabilities. Current liabilities, and I'll come here. The current liability that I have is trade payables. So the trade payables is, the ending figure is 4,800. Right there. 4,800. So when I add my total equity and liabilities, add these two values, you get to 39,994. That. So that is what we basically do to come to what they have asked us. So I believe that you've gotten something from this question, and I encourage you to look out for other questions of single entry and see how you can compute them. These questions are common, and the examiner is trying to see how you can use the available information to prepare financial statements when you're not provided with the trial balance. So thank you so much for listening to me, and I wish you well.